Congratulations! You found the Pirls Stock Market Commentary for October 4th, 2015. Market breadth. With this past week's market fractional advance, our bull-bear point and figure ratio at 0.41 was essentially unchanged from 0.40 last week, remaining in bearish territory. The total count of securities in bullish or bearish patterns rose fractionally to 2,835. The count of bearish stocks increased fractionally, while the count of stocks in bullish patterns increased 2%. The Pirls P&F Market Breadth Summary Chart shows us a market now 19 consecutive weeks in bearish territory. Paid subscribers have access to the OpenOffice Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To receive a free weekly subscription to the commentary, simply enter your email address in the spot provided. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 138 points for the second decline in 5 weeks. At a negative 638.90 points, it continues below all 8 tops above plus 100, continues above the August 2015 bottom, the October 2014 bottom, and continues below the May 2014, August 2014, January 2015 bottoms below minus 100 in the last 3 years. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in accumulation mode, with average daily volume higher than the prior market week. In the last 2 weeks, the Nasdaq had 2 accumulation days and 4 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in distribution mode on higher average daily volume. Momentum. At Tuesday, 9/29 close, the CCI 20 daily had 6 consecutive days below zero for a change in Woody's trend to down. At minus 7.81, the CCI 20 is outside the plus or minus 50 range required for a valid zero-line reject short entry signal. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's downtrend 2 weeks ago, while the daily CCI 20 began a Woody's downtrend this past week. The CCI 20 weekly has fallen to minus 147.45 from minus 124.30 last week, continuing outside the plus or minus 50 range required for a valid zero-line reject short entry signal. Industry rotation, the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 are negative. Bullish REITs continues in the top 5. Semis left the bottom 5 and entered the top 5. Disk drives and computer hardware have left the bottom 5. Oil services has re-entered the bottom 5. Bearish, gold and silver continues to lead the top 5. S&P Retail and Comp Tech have left the top 5. Brokers has re-entered and leads the bottom 5. Focus this week from www.davidstockmanscontracorner.com. Credit Suisse Risk Appetite Indicator. Markets are back at panic levels. By Sarah Seelin at MarketWatch. The article highlights previous markets at panic levels and provides some indication as to whether this is a short or long-term buying opportunity. Thank you for viewing this week's Sand to Pirls Stock Market Commentary, featuring the proprietary bull-bear point and figure market breadth summary chart compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant weekend, that you are looking forward to a prosperous and productive week coming up, and wishing you true success.